Here's where things get uncomfortable, because this part is about psychology, not charts. Most people wait for confirmation. By the time confirmation arrives, options are limited. In every major shift, early movers look crazy, late movers look trapped. When metals rise sharply, governments don't blame policy. They blame behavior, speculators, hoarders, unpatriotic actors. Language matters. Once a narrative is established, restrictions feel justified. Silver's industrial importance makes it a strategic asset. Gold's historical role makes it a symbolic threat. That's why any future action wouldn't be equal. Institutions would be protected. Large players would get exceptions. Small holders would face friction. This isn't about fairness. It's about leverage, and leverage always flows upward. Preparation. Today isn't about panic buying or extreme behavior. It's about understanding how fast conditions can change. Rules don't tighten all at once. They tighten one step at a time, until suddenly you realize there's no room left. The people who suffer most are not the reckless. They're the unprepared optimists, those who believed nothing could change. So what does awareness actually look like? It means asking better questions. Not how high can silver go, but what happens if it does? Not will gold hit $5,000, but what changes when it does? Because price is never the end of the story. It's the beginning of attention. When attention reaches a certain level, control follows. And this isn't a message of fear. It's a message of clarity. Markets reward preparation. History punishes denial. As we move into a world with higher inflation, higher debt, and lower trust, gold and silver will stay relevant. Not because they're trendy, but because they're honest. The real danger isn't owning metals. The real danger is assuming rules will always stay the same. Near the end of this video, I want to hear from you. Do you believe rising gold and silver prices will bring freedom or more restrictions? Drop your thoughts in the comments. Real discussion matters more than silent watching. If this video helped you think more clearly, share it with someone who still believes this time is different, because history never repeats exactly, but it always rhymes. This is USA Trending News. Stay informed, stay calm, and stay ahead. What if the biggest danger to your financial future is not inflation, not a market crash, but a decision made behind closed doors? A decision that most people won't see coming until it's already too late. Because history shows us something uncomfortable. When money systems are under pressure, governments don't protect savers, they protect control. This is USA Trending News, and today we're talking about something most channels avoid. Not because it's fake, but because it's uncomfortable. Gold and silver have always been more than metals. They are signals. When they rise slowly, no one cares. But when they rise fast, they start telling a story that governments don't like. A story about lost trust. Back in 1933, Americans believed their gold was safe. It was legal. It was personal property. People trusted the system. Then suddenly, everything changed. The government didn't call it confiscation. They called it an emergency measure. Citizens were ordered to turn in their gold for paper money. Most people complied, not because they wanted to, but because they believed it was temporary. That trust was never rewarded. Fast forward to today. We're not in the same world, but we're facing the same pressure. Debt levels are historic. Inflation has damaged confidence. And the public is slowly waking up to the idea that paper money may not protect them. Before we go deeper, if content like this matters to you, make sure you like the video and subscribe to USA Trending News. We focus on real conversations. Not hype, not panic. Just awareness. Now here's the key difference today. Silver is no longer just money. It's infrastructure. Solar energy, electric vehicles, defense systems, medical equipment, all depend on physical silver. And unlike paper assets, silver can't be printed. The supply is tight, the demand is rising. And that combination has never ended quietly. When silver starts pushing toward $100, it doesn't just attract investors. It attracts attention from people who care about supply chains and national security. Gold moving toward $5,000 sends a different message. It tells the world that confidence in currencies is breaking. And that's when policymakers start to panic, not publicly, but internally. This is where risk changes form. It stops being about price volatility and starts being about rules. And rules can change overnight. Most people assume confiscation means force. That's the mistake. Modern control is subtle. It starts with paperwork, new reporting laws, higher transaction taxes, limits on private sales, rules that sound reasonable, until you realize they only move one way. Once metals become too important, ownership becomes sensitive. And sensitive things are always regulated. Here's something most investors never think about. Visibility creates vulnerability. When prices are low, nobody cares who owns silver. When prices explode, suddenly everyone wants data. Who owns it? How much they own? Where it's stored? This isn't paranoia. It's pattern recognition. Silver creates panic because it disappears. Gold creates panic because it exposes weakness. Central banks understand this. That's why they're buying gold quietly, consistently, and aggressively. They're preparing, not for profit, but for stability. Ask yourself this. If gold was useless, why would central banks want it? If silver didn't matter, why would shortages keep appearing? The answer is simple. These metals sit outside the system, and systems don't like competition. Every financial crisis creates a moment where governments must choose: protect freedom or protect control. History shows which option usually wins. This doesn't mean the same outcome is guaranteed, but it does mean ignoring the possibility is dangerous. People often say, it can't happen again. History is full of moments that weren't supposed to repeat. The smartest investors don't predict exact dates. They prepare for probabilities. As silver rises and gold climbs, public interest will explode. Media narratives will shift, and policies will follow narratives. That's not fear, that's reality.